this. Hi guys, today I got with me my good friend and colleague Gerry Vitoratos, and Gerry is officially a tax expert. He does have a master's in tax. Gerry, I don't know what you find funny about that, buddy, but it's the facts, it's the truth,
Yep.
right?
I got a piece of paper that says Masters of Tax. Master of Tax. So there you go. Official.
Official, exactly. And
Not that anybody can be a master of tax, but anyways, go on.
we're going to have a little bit of a chit chat, okay? And I'm sure from a tax perspective, what everybody is now concerned with is claiming office in the home expenses, right? And a couple of other matters. Now, with respect to office in the home expenses, the CRA has devised a new form called the T777S. However, to simplify things, you can claim an amount up to $400, right? And forego having your employer certify this deduction because ordinarily they
Yep.
do, and giving in receipts and keeping receipts. Now, I'm going to provide a link to that. What's important to say with respect to UFile, we are working on it presently. In a little short while, it should be coming up with the next update to our software. But there's another item that's been happening, another trend that people have been overlooking, and this has been going on for many years. And that is, um, there's two perspectives about it, right? Either moving closer to your work location, which was a trend in the past, and what has been happening lately is more people are moving away from the city center and to the country or suburbs. I like the country better. I like I like the idea of having a home in Morin Heights, up north, a couple of hours from here. Very nice looking nature, peace and quiet, tranquility allows you to concentrate and meditate. And in addition to that, I don't want to give up my principal residence in the city, in town. I want to put it up for rent, long-term rent, of course, and gain some income while I'm working in in um, in my sanctuary, my little heaven. So, what do you think the CRA will do in that respect, Gerry? Are they going to
Ab- Absolutely
not
nothing.
me?
Congratulations, George. Congratulations. Absolutely nothing. Of course, my nose should be growing, disproportionately right now over here when I say that. In actuality, unfortunately, George, you're going to get caught up in what we call in taxonese the change of use rules. That's essentially what you're going to be caught up with. So, because you've decided to change the use of your property from being your principal home where you ordinarily live to now being a rental where you're actually getting property income from, well, now you have a deemed transaction, a deemed what the government calls a deemed disposition. So essentially, you George have disposed of this property. You principal owner George have disposed of your property to you've cloned yourself now to landlord George. That's essentially what's happened. Okay, so to the government, it's a taxable transaction. Now, no money changes hands because all you've done is essentially, put a for rent sign in front of your house and you said, hey, come on board, and you found a renter. Essentially, now you're making money off that property. But to the government, you're essentially two people. You are homeowner George and landlord George. And homeowner George has essentially sold his property to landlord George. That's essentially what has happened. Okay, it almost sounds like a Costanza meme, essentially, But that's essentially, in non-taxonese, that's what's happened. Now that essentially becomes a taxable transaction. Okay, so there is a sale. Now there's no actual sale here, but there is a sale income tax wise. So unfortunately, you would normally have to declare this transaction on your tax return. And you would need, the specific schedule, which is Schedule 3 on your tax return to declare this transaction. Now, this can be unfair because, homeowner George and landlord George are the same person. They are you. Okay. And there's no money exchange between these two, fictitious individuals. You're not fictitious, George. Just bear with me here, for my example. Okay. Now, the issue comes in, well, why am I declaring something? And remember that when you declare this disposition, you're declaring it at fair market value. Okay, the disposition amount, even though you've gotten $0, is what the property is worth if you were to sell it tomorrow. Okay, if you were to sell it tomorrow in the marketplace, what would you ordinarily get? That's essentially what the value would be. So you're declaring this taxable transaction. What are you going to do? You don't have the cash to pay this tax on money you never got. So the government gives you a leeway. And the leeway is what we call subsection 45.2 election. Okay, so it sounds Texanese. Essentially, picture 45 and with a bracket, put a 2, okay, next
Oh,
to it. And that's essentially what we're talking about, a subsection 45.2 election.
I got
What
it
you're
up
doing,
on the screen, Jerry, right? And it's located in the rental guy T4036, and I'm going to give you a link to it.
yes,
Right.
exactly. And that guide really tells you essentially how it works. Let's explain it now
Hmm.
in this video. So essentially what you're doing with 45.2 through a letter, okay, that you create yourself, there is no prescribed form. Unlike what we mentioned before on the employment expenses on a T777S, essentially, there is no form. It is a letter that you have to mail to the CRA telling them that you are electing under subsection 45.2. Now, what are you electing? What are you doing exactly? You are electing to tell the government that you are deferring the transaction, that you're deferring declaring this tax transaction, this deemed disposition, and you are deferring until the date that you actually sell the property to somebody, to some person in a bona fide transaction.
A
That's
small,
essentially what you're.
yeah, a small technical note, right? You write the letter, make sure you clearly identify the property with the postal code, your name, social insurance number, date it, sign it, keep a copy of it. You don't have to send it by registered mail, but it's would be recommended so you have proof with your copy that you actually filed it. And why is that important, Jerry? And I know we're going to talk about filing it, right?
Yeah, because there's a deadline, right?
Mm-hmm.
The government does not give extensions to a subsection 45.2 election. So your deadline is the same deadline that you have for your tax return for the year that you're filing and for the year that you made the change, that you changed the property. So assume right now we're in 2020, and in 2020 you've made the change, you've converted your principal home into a rental. So that means your tax return 2020 is ordinarily due by April 30th of 2021. That means that the letter is due on that date as well. Okay, and that letter is mailed. So even if you're net filing using U-File, for example, even if you're net filing your tax return and you're not declaring this transaction because you're electing under 45.2 to defer the deemed disposition, that letter still has to get mailed to the CRA with exactly what you mentioned on it, okay, and it has to be mailed by April 30th of 2021.
It could be under 45.3 as well, right, Jerry?
Yes, that's the reverse.
Mm-hmm.
Okay, that now 45.2 is a principal residence that you're converting into a rental. 45.3 is the complete opposite. 45.3 is a rental that you are converting to a principal residence. So in other words, you've gotten fed up being alone with your thoughts in Warren Heights amongst the squirrels and the caribou and whatever else is there. Okay, so essentially you're coming back into that home, and at that point, again, normally you would have another taxable transaction.
Jerry,
And
Jerry, before you go
yes,
on, you promised me
I
another
can.
video for 45.3. Now there are
Okay, okay,
two
we'll get into it.
two
We'll get into it
caveats
then.
with respect to electing 45.2. Hi, Monica.
We'll get into it then.
Right? There's two caveats, two things we got to keep in mind with respect to 45.2, right?
There's two caveats.
I
Yes.
still have to
Okay.
declare that rental income.
Yes, you're still declaring the rental income. Yes, the rental income would be taxable. There's no choice there. Okay, so your rental income will be taxable. However, what 45.2 allows you to do is that it allows you to continue to designate your home as a principal residence, for the next 4 years. In other words, In other words, for 2020 until 2024, you can choose to designate that rental property as a principal residence. You can choose to do so. Okay. But there's a caveat to that. If now 45.2 allows you to do this, but it might not be a good idea to do it. The reason being that in your example, George, you have a second property in Warren Heights. Okay, so you own two properties for which, under the income tax code, you ordinarily inhabit. Okay, you live in both of them according to the law. Now, the rental, you're not actually living in it, but the election under 45.2 makes it so that you still are considered as ordinarily inhabiting that property for the next 4 years. Now, the catch is, we have to understand a bit of what the principal residence is. Okay, so what is a principal residence exemption? So a principal residence exemption is that when you live in the home that you ordinarily inhabit, when you sell that property, that property is not a taxable. There's no taxable capital gain for that property because it is your principal residence. However, in order to get that exemption, you have to designate every year that you live in that property as your principal residence. Now, the catch here is that you currently have two homes for which you can designate as a principal residence. You really have two of them right now. The catch is, when it comes to a principal residence exemption, is that you could only designate one home per year. So if you choose to designate the rental property for the next 4 years as your principal residence, well, for 2020, 2024, you lose that designation for your home in Warren Heights. You lose it. And for those 4 years, you are taxable if you sell that property in a bona fide transaction, and to somebody else, in other words. So you really have to weigh and see which property is more valuable from one to the other, and see whether it's worthwhile to which property is more worthwhile to designate in those 4 years, especially.
Right. Now, while I'm declaring my rental income, there's one expense I'm not able to take, correct?
Yes. So, I mean, something, remember the overarching rule when it comes to expenses, deductible expenses, is they have to be incurred to make money. Okay, so they're there in order for you to actually make money on. Okay, that's the overarching rule, whether it's business or whether it's property income. In other words, rental income in this case. Okay, now one such expense is what we call in tax terms the capital cost allowance. Okay, and the capital cost allowance, in very simple terms, is depreciation. So the loss of the value through the usage of the property. Okay, this could be typical examples of this are equipment like computers or cars, but your home or the rental property that you have is also part of the of properties that you can depreciate tax-wise. The catch, and this one is not even an election. You can't. It's not like the principal residence where I could choose to designate the rental property in the next 4 years. When it comes to an election under subsection 45.2, you are not allowed to use the capital cost allowance. In other words, you're not allowed to use a depreciation expense on that property. And unfortunately, we're talking about big dollars. The government allows you up to 4% of the value of the property as an expense. Okay, on your rental statement.
On a declining balance.
On a declining
right.
balance, yes.
That's
But
another
still
video,
a lot of
Jerry.
money.
That's another video.
Oh
right?
yeah, absolutely.
We're gonna have to talk about that. Well, actually, I already did that video. I already did that video, Jerry.
Did you?
Darn.
Okay.
So that's pretty interesting information. People do have a lot to think about, and I think we've made it clear that they have a lot of choices, right?
Mm-hmm.
And definitely something to think about.
Yep.
I wish though I had a property up north. I could be able to go to relax and whatnot. But unfortunately, here we are one day before New Year's, and we're working. I'm not sure if we call this work. We love tax so much that I think this is almost like a hobby for us, right? And
Yes,
I
we live
remember
and breathe Texas. That's what we do.
our former boss Malcolm Campbell when he first saw me just after my first job interview at UFile. The question he asked me, no other, I was working 25 years in tax, and no other boss asked me this question. You must enjoy tax, George. I said, sure, hell, I do. Sure, I do. Yeah, I do. I love it, and I also love technology. And did I mention to you, Jerry? I also have a Steve Jobs turtleneck sweater. It's a great sweater, Jerry.
Oh, oh, wow, this one is awesome. This one is just an awesome, awesome sweater. Awesome sweater that I got from my cousins in Kansas City. Peter's Clothiers. I'm
All
going to do a
right.
little cheap advertising for them too.
All right then. So if users have any questions, they can certainly comment on the video. I'm going to put the link to the rental guide in the video, and perhaps another income tax folio. I think you could start with the guide. It's great reading, right? And definitely our UFile support colleagues should be able to help people with respect to this as well, right?
Absolutely.
So Jerry,
Absolutely.
I'm going to end the video, but don't hang up. Thank you so much for this valuable information. I think everybody should greatly appreciate it. And we'll definitely do it again sometime, correct?
Absolutely. Absolutely.
Good
You stay
stuff.
tuned. Stay
Yeah.
tuned for more.
And maybe we should do it en français aussi, huh?
Could be.
Could
Yeah.
be. All right. Take
Yeah.
care,
Yeah.
Jerry.
Yeah. Absolutely. Take care.